What's going on, everyone? In this video, we're going to be talking a little bit more about supply and demand and how you can use supply and demand day in and day out to make yourself a more consistent and better overall trader. Now, there was a question that was asked on one of the last supply and demand videos that I did, and this is probably going to be 2 or 3 videos long, so this is just going to kind of get into a little bit of the question. But the question overall, it was like a 2-3 parted question. And one of the questions that was asked was, how can we use the daily or the 4-hour time frame to set our supply and demand levels, and how do we move down to a smaller time frame to sort of scalp those on a day in and day out basis? Now, I believe that this works a lot more better than, say, for example, setting up supply and demand zones on a 2-minute chart or a 5-minute chart. Those are going to be for hyper aggressive scalpers, people who are going to get in and they're going to get out very, very quickly. Maybe you're going to look to take 20 cents, 10 cents, 50 cents max. You're not really going to get those dollar moves. So how I like to set up my supply and demand zones, if we just kind of simply take a look at the 4-hour time frame, and in this video we'll use the 4-hour time frame as our reference guide. We'll also just use the triple Q's ETF because it's very simple. Everyone knows what the NASDAQ 100 is. We don't have to get into any particular stock. So what we're looking at here is the 4-hour time frame. I've got the absolute top weight to the top side, $322 and around 16 cents. It might be, a couple cents off on your charts, but just do me a favor, kind of follow along with me. So whatever platform that you use to do your charting, whether it be Thinkorswim or TradingView or MT4, MT5, whatever it is that you use, kind of reference your 4-hour chart. Now, the way I have it set up here, I've got the 4-hour 180-day chart set up, right? So it's going to give me 180 days worth of previous data. I do not, however, need to go back 180 days to kind of mark out my supply and demand zones. What I kind of like to do is go back at least a week or two, right? I want to know what's been happening the last week or two, because I'm not really too focused on what's happening next month, let alone what's happening next week. I just want to know what potentially could happen tomorrow, right? That's all we're looking for. All we are trying to do is win our interval. We're just trying to win the day, right? If we can try to be on the right side of the day, then we can be more consistent than we're not. So if we just kind of look at where we're at here, I'm going back about 2.5 weeks worth of data. Now I'm pulling up $322.16 as our high side. I was also pulling up $312 to the down low. So for the past 2 to 3 weeks, we've been in essentially a 10-point range going sideways up and down. Now today we did have a drastic sell-off towards the end of the day, and I'm going to actually make another video talking about what happened at the end of the day, because literally as soon as the market closed, the NASDAQ 100 shot up 100 points on the futures. So that kind of busted charts to the downside if we were thinking short going into tomorrow, which a lot of charts did really look good tomorrow short. Now we kind of have to reevaluate that, and we're going to have to maybe think potential dead cat bounce, right? So what we are looking at here, 4-hour chart, again, if we were to kind of go just 1, 2, 3, 4 days out, and you just kind of wanted to get the supply and demand zone for the past 5 days, this is what I would recommend. If you're just looking to day trade for the next day, I would go 5 days back, okay? Then mark out your supply and demand zones. If you're looking to potentially get into a potential swing trade that could last 2, 3, 4 days, then maybe go back 2 or 3 weeks worth of data, okay? So we're not essentially looking for just one specific candle that's going to be, a big candle. What we're looking for is a range, okay? So a range means I want to know what's the absolute high, what's the absolute low. That's my top supply, that's my bottom supply. Now, obviously it doesn't have to get all the way up into the upper zone. So for example, if my absolute top supply is 322, I do have another high point here about 4 or 5 days ago that is sitting at a price of around 321. So there's a dollar range there, right? So let's just call our upper supply range, okay, in this area, okay? As you can see, every time price action gets in this zone, this dollar zone, it tends to get very choppy and tends to reverse course. Then we kind of come back up into this zone, and then we reverse course. We get back up into this zone, and then we reverse course, right? So that $1 to $1.50, $2 range is not essentially where you're going to want to be buying long, okay? It's not essentially, if you're at the bottom of the range, where you're going to want to be shorting stock or buying put options, right? what you're going to want to do in these particular cases, right? If we look at today, for example, we had a beautiful flush followed by a reversal, but there was an amazing short setup that took place today. If we kind of look at what was going on here, we have our bottom demand zone sitting at $312.20, give or take, right? Again, I might be off 5 cents, I might be off 10 cents. We're not worried about that because we're looking for dollars. We're not really looking for 5 cents. So if 312.20 is the absolute bottom in the last 2 or 3 weeks, or whatever time frame that you're going to kind of use to set those supply and demand zones, right? For in this case, I just pulled up, some recent data here going back 2 or 3 weeks. This is my absolute demand zone here at 312.20. So if we're looking to scalp, right? If we're looking to scalp, these are going to be our pivot levels. And what we would be looking for, okay, what we would be looking for, since we're on the bottom of demand, we would be more what? Long biased or short biased coming into today, right? If 322.16 to the high side is our top supply, well, I'm not going to be sitting here today opening up at 316 thinking, hey, I'm going to go long. If supply is not, for another 6, 7, 8 points, right? I know that the Qs, potentially could go 6, 7, 8 points, but the idea and the reality of that happening is very slim to none. So being that we're already trading at the bottom of the range, I'm coming into the day with more of a short bias. Does not mean that I will not take a scalp to the long side if something presents itself, but I'm going to be thinking more short bias. Now, how we take this absolute demand zone, this pivot level that we have down here of 312.20 and scalp this on, let's say, a 5-minute time frame, I'm going to show you. So we would simply go over to the 5-minute time frame. We're going to simply zoom in of just today's price action, okay? So what we would be looking for here, okay, on a 5-minute time frame, as we see the days start to sell off, the days selling off, we push up into the 20-period moving average, we then sell off, we push up into the 20-period moving average, we then sell off. What I'm looking for, if 312.20 is our absolute bottom demand zone that we've been carrying here for the past 2 to 3 weeks, what I'm looking for is a candle to close below it and the next preceding candle to confirm that new low. So in this case here, what I would be looking for is, as soon as we start to break and we do close below this pivot level, I would be looking at a price of around 311.95. Okay, now we break that, we confirm the low, and then we start to trickle up. This is exactly the area that a ton of new traders get worried and they get stopped out. Okay, look at the potential move that came following, right? So the potential move that came following was let's just get the exact math here. From our entry would have been around let's just call it 311.90. Potentially came all the way down to the day's low of around 309.88. So we're talking about a $2 move to the downside that you could have essentially captured between the hours of 9:30 a.m. Pacific Standard Time and market close at 1 p.m. That's a $2 move. If you play 10 contracts to the downside in the money, at the money, and you get a $2 move on the Qs, you're making astronomical amounts of money considering what your position sizing in. Obviously, if you're playing one contract, you get a $2 move, maybe you're making $100. Maybe you're making 150. If you're playing 10 contracts, maybe you're making $400, $500. That could definitely make someone's day, let alone make their week, depending on what type of trader you are. Obviously, if you start trading, 50 lots, 100 lots, you're going to make a lot more than that. But again, so what we would be looking for is here a break of this pivot level, which has been a 2-3 week consolidation period. And then we would be looking for the next candle or one of the preceding candles, at least within the next 15 to 20 minutes, to confirm that low. We get that confirmation here. Now, again, very quickly wicked below and then immediately bounced. So immediately after you would have got into this trade, you would have 100% went into drawdown. It's during these times that you need to remain patient and remain calm, because newer traders are going to get stuck. They're going to panic, they're going to sell, and they're going to look back 2 or 3 hours later and think to themselves, I would have made $2 on the trade if I just would have controlled my emotions. Okay, so why this trade essentially would have not stopped us out, because if we just go back to the day's price action, when we had the initial drop and the initial bounce, we did not take out the previous high, okay, of the pre-market and of the initial opening range. This did not take out this high is what I'm trying to say, okay? This move here, this dead cat bounce, did also not confirm this close over the 20 period moving average. So this is signifying to me no actual real change in trend. If this was going to be an actual initial flush followed by a bounce and a change in trend to go back up to the upside, what we would have needed to see is the candle close over the 20 period average like it did here, and then we're going to need this candle to confirm the high, and it's going to need to close up in this range. Okay, so that got a little messy. Let me go ahead and just take this off. Let me take this off and let me show you once more. If this move here was an initial washout and this bounce was going to be a confirmation with a potential move back up to the upside, this green candle that I just drew a line on needed to have this candle close above it. And if that's the case, then if you were short off the open, this would be where you get stopped out. If you're looking to play the reversal, then this candle here that should have closed green would have been your entry, and your stop loss would have been two places: another close back under the 20 period moving average, or a close under your reason why candle. Your reason why candle is this candle here that now closes back over the 20 period moving average. So you could have used this as a stop for a potential run up. That did not happen. So as we get to our macro pivot level down here, we had the same kind of action happen. We have another flush followed by a bounce, followed by a candle that does close back over the 20 period moving average. However, fails to get over the previous high, and the next preceding candle does not take out and confirm this close over the 20 period moving average. So in that case, we cannot be thinking go long, because anyone who did try to go long here immediately got shooken out, right? Immediately got shooken out. So as soon as we break this level here, you could have entered a short position here, quickly sat in a little bit of a drawdown for around 30 minutes, 5, 10, 15, 20, 25, 30. 30 minutes, your price would have went from around that 311.90s entry all the way back up to 312.60s. So if you're thinking about it, you're down 60, 70, 80 cents maybe at the peak, right? No reason to panic. It goes along with the game. For example, me, if I'm trading equities or options, I'm giving it at least $1.50 risk, right? Especially if the trend is down, okay? $1.50 risk. If that's too much risk, downgrade, size down. If you play options and you play 5 contracts, go to 3. If you play equities and you're looking to take a position on potential shares, and let's say you take 10 lots normally, take 2, take 3, right? Size down, right? Size down. Even if you would have took 2 or 3 lots on the triple Qs, which is 300 shares or 200 shares, you got a $2 move in your favor. You're looking at $200, $400, or $600 in potential profits. Around the same if you took 5, 10 contracts, or you took 2, 3 contracts of options, right? So I hope you're following along. Again, I'm going to need to do more breakdown, because again, I know that this could be an area where people can get a little bit confused. But again, our entry would have been here, a break below the pivot. We now put in a new low, right? So this is what I want to clear up and justify for everyone. 312.20 we put as our demand zone. Yes, we're following along with that. We went, remember, from the 4-hour chart, 312.20 was that absolute bottom low wick. That becomes our bottom demand. That is what's called a pivot. Now, a pivot point just means that there should be some sort of inflection, some sort of price action movement going on around that pivot number. Now, in order for me to take the trade, what I need to have happen is I need price action to break the pivot. Check. Yes, we do that. As soon as we break the pivot, I need a following candle typically to come within the next 5, 10, 15 minutes to confirm that new low. Okay. So if, and I'm talking about for day traders, this is for day traders, this is for scalpers. This is not going to be for someone who's looking to swing trade for 2 weeks. This is just solely if you want to be in and you want to be out on the same potential day. Okay. Again, bottom demand zone from the 4-hour time frame. Okay. We get the break of that demand zone on a 5-minute time frame. We get the close below. This becomes our new entry. If this is our demand zone, this is our pivot 312.20, we need a break, we need to put in a new low, okay, which we did, and then we need to have the next 1, 2, or 3 candles after that confirm that new low. And it would have been here at 9:35 a.m. Go to your charts and look at 9:35 a.m., which is 12:30, right? 12:35. If you look at that 12:35 Eastern Standard Time candle, look at that candle. That would have been your entry. Now you would have had to sit through that 60-70 cents worth of drawdown. But again, going back to what I said, we never broke above the 20 period moving average and then confirmed going higher, so there's no entry going long, there's no reason to get shaken out. And this candle that closed above the 20 period moving average never took out the previous high consolidation point here, right? So there's the momentum is still favoring the downside. There's no indication that's telling us that this is any type of reversal. So we would have to sit through this drawdown. Again, like I've said in many videos before, you will not win every trade, and you also not get into a trade and automatically it just goes in your favor. You might have to sit through a little bit of pain. It comes with experience, it comes with trading. It's something that you're going to have to adapt to. It's something that you're also going to have to get comfortable and used to, okay? So you would have sat through this move here, and again, if you would have just waited for that rejection to happen here, you can then see that we do get another close back below the 20 period moving average. And then we go from a price of 312.31 all the way to a price of 311. So if our entry price was somewhere even in the 312.90s or excuse me, the 311.90s, you would have essentially still made almost $1 on this move to the downside. If you would have sat through just a little bit more time, you would have got close to another $1.50, $2 on the whole potential move. And then if you look at the last closing candle before the day, a lot of traders will sit there and they'll think to themselves, I'm going to swing this overnight. I'm already up on the position. I'm already in the green. Why not just take this position overnight? Boom. Look what happens after the bell. 100-point reversal on the futures. And this went from a bottom price of 309.90 all the way up to a price of 313. This is why, my friends, if you are entering with a mentality of scalping or taking a day trade, to never, and I repeat, never hold options contracts overnight when you are already profitable $1, $2, $3, and so forth. Take your money. There will be another trade tomorrow. We will find new levels tomorrow. In the next video, I'm going to be going over how we can, for example, create different supply and demand zones based on a 1-hour time frame that I love to use day in and day out for scalping and day trading. Hope you guys enjoyed the video. Make sure to like, comment, and subscribe. Also, if you guys are interested in joining the Discord, evolutiontraders.com is going to give you how and the why you should join evolutiontraders.com. I will see all of you guys on the inside.